Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, April 18th, 2012 is sponsored by Realtik. All right, let's get right into the mix, folks. Markets are slightly lower on the day, with the overall markets under pressure due to IBM and Intel earnings that were reported yesterday after the close. Let's take a look at both stocks. Intel is trading down 45 cents on earnings, while IBM is taking a little bit of a bigger hit, down about $6.50. Remember, IBM is a monster component of the Dow Jones Industrial Average, so obviously the Dow under some pressure, down about 72 points today, while the S&P is down 4.5, and the Nasdaq is down 9 points on the day. If we go back to the SPY, you can see again we gapped lower and then had a nice little buy as the markets rallied up into the 20 moving average and gap fill, and at that point we fell back down and have kind of chopped sideways the rest of the day. It's not a big drop. I mean, we saw the monstrous rally yesterday, and then overall, we've seen a market that has kind of just paused today. It hasn't pulled back dramatically. Spider's just down 33 cents. But again, all eyes continue to be on Europe. Yesterday, the big rally was caused by some decent earnings. But in addition, we also saw some positive news, the first decent kind of calming of a storm in Europe in quite some time. So again, that helped the markets rally yesterday. Today, it's just kind of pausing. No major effects, nothing major going on. And again, the markets are just kind of slightly lower on the earnings news from IBM and Intel. We did get some earnings from some other plays out there, like Yahoo. Yahoo did not have bad earnings at all. The stock is up 46 cents. And there were a couple other ones as well. But today, again, we have more earnings being reported after the bell. To go over them, let's take a look. Qualcomm reports. Right now, Qualcomm down about 25 cents. VMware is also reporting today, which is up $1.60. And sure enough, the last one, which is also a decent-sized company, Yum Brands. Now, there are a lot of other companies reporting, but these are the main three that I saw on the list for today. And then tomorrow, we'll have even more on Thursday reporting as well. All right, a couple name brand stocks out there. Apple Inc. is trading up $3. The stock opened and surged at the open up to about 620, then collapsed to go negative, and now it's getting a nice 3-bar surge up and kind of rescuing this market. It's getting this market a little bit of some upside action here, which is a nice little move. And again, if you're looking at Apple in respect to a possible kind of resistance point intraday, you're going to look for your double top right up here. If you get there on a straight shot up, you should get a small pullback to short as an intraday trade. That would be the key level on Apple today to watch for this afternoon if it continues to climb. Google, let's take a look at Google, up $1.61. Google was on the weaker side in the big rally yesterday. Still was up, but did not end up very much. And ultimately, we are seeing Google again. We're seeing a lot of buying going on here in some of the key name brand plays. Okay. So again, we'll continue to focus on some various charts out there. I'm just scanning through myself, seeing what else is going on. Taking a look at Goldman Sachs, down about $1.37 today. Goldman again under pressure after earnings yesterday morning were pretty poor. Even with the market's big rally yesterday, Goldman Sachs was lower on the day. All right, so that's what's going on there with Goldman. Scanning through JP Morgan, another key player, down 42 cents. And we're really seeing weakness out there in the financials. I would say that would be where the majority of weakness is today, in the financial players. Chevron and Exxon are flat to positive overall. But again, it's the financials that are lower. In respect to technology, there again, it's a mixed bag. You have, again, as I said, Apple and Google positive. Amazon's having a good day, up almost $5. In fact, let's take a look at the Amazon chart. If you go to the daily chart on Amazon, it's getting a bounce right off the 50 moving average. Plus, there was a master trend line here that I've talked about very often that could not break. And again, notice that pop up on that trend line. So we're seeing that continuing to form here. And that's continuing to help Amazon prop itself up. Whenever that line does break, if it does break, you will see a big move down. Big move down. All right, so keep a close eye on that if it should happen. And I think Amazon reports next week, if I'm correct. All right, so again, markets continuing to stay relatively stationary here in respect to the overall aspects in the market. Generally, we're seeing, again, spiders continuing to float up, just down 20 cents. Nice little hit of the 50 moving average. The high of the day is not far off as well, which will be secondary resistance. And then ultimately the high of the day from yesterday will be your next spot. Any sort of continued upswing, in my opinion, this market will see further downside. It's just a matter of time. It's a matter of time in Options X this week, along with earnings. And when do we see a reemergence of issues out of Europe? All right, on that note, folks, I'm going to get back to trading. It is a good trading environment right now in the Intraday Stock Chat and in the Research Center. I put out new trade alerts last night as well as a couple days ago, so there are some key trade alerts out there to be had, and they will make us money just like all of our other plays out there making money. All right, and again, it's all about reading and understanding the market's proprietary technical analysis. Come to InTheMoneyStocks.com. Take the 7-day free trial. 7-day free trial to the Research Center. 7-day free trial to the Intraday Stock Chat. We'll see you here to make some money and learn the amazing methods of InTheMoneyStocks.com.